Welcome to the Explainer. If you're looking to turn really dense regulatory standards into clearer, actionable insights, well, you are absolutely in the right place. Today, we're building a corporate risk dashboard for the electrical and electronic equipment sector, and we're using the latest SASB sustainability standards to do it. We are basically taking the complexity out of product safety disclosures and turning them into a powerful visual tool. But before we get our hands dirty building this thing, let's ask a pretty fundamental question. What actually happens to your bottom line when a product fails? And, we aren't just talking about a bad review online here. A severe product safety incident triggers a massive domino effect across the business. We're talking product liability claims, deep reputational damage, crazy expensive redesign costs, and heavy regulatory fines. Understanding and tracking these risks isn't just about checking a compliance box. It's about protecting the financial health and the brand value of your entire organization.
So, here's our roadmap for today's explainer. First, the product safety dashboard. Second, metric 1, tracking recalls. Third, identifying notable recalls. Fourth, metric 2, legal losses. And finally, documenting corrective actions.
Okay, let's dive right into section 1, the product safety dashboard, connecting operations and legal.
Think about the contrast between physical operations and financial fallout, because that perfectly illustrates what our dashboard needs to capture. On one hand, you have recall volume, the sheer number of physical units that actually have to be pulled from the market. In stark contrast to that, you have legal monetary losses, the actual currency draining from your accounts due to litigation. This contrast represents the two core pillars of our executive risk management dashboard, the physical operational impact versus the direct financial hit. We have to track both of these to really see the whole picture.
Moving right along to section 2, metric 1, tracking recalls. This is where we break down RTE 250A.1.
Now, you really want to pay attention to the exact phrasing SASB uses here. A recall isn't just taking a product back in a box. SASB actually defines it as any repair, replacement, refund, or notice program intended to protect consumers. That means even sending out a widespread safety warning label counts as a recall event that triggers this reporting requirement. You've got to make sure you capture all of these operational events.
But as you probably know, not all recalls happen the same way. The standard requires us to clearly understand the difference between voluntary and involuntary recalls. Voluntary recalls are the ones initiated proactively by your company to pull products from the market and address a safety concern. Basically, you found a problem and you fixed it. Involuntary recalls, on the other hand, are mandated by governmental regulatory agencies. These happen when a product flat out fails to comply with regulatory safety standards or when regulators step in and identify a severe defect. So for all you corporate preparers out there listening, here is your straightforward quantitative checklist for metric RTE 250A.1. Step 1. Disclose the total number of product recalls issued during the reporting period. Step 2. Disclose the total number of individual units recalled. And step 3, actually, this is an optional but highly recommended metric under the standard, calculate and disclose the percentage of recalls that were voluntary versus involuntary. Why do this? Because it gives investors a really clear view of how proactively you're managing safety issues.
All right, section 3, identifying notable recalls. This is about what happens when safety risks escalate. According to the SASB standard, a recall gets bumped up to notable status if it affects a massive number of products or, and this is obviously much more severe, if it's related to serious injuries or fatalities. Also, keep in mind that if the recall is mentioned in periodic jurisdictional recall reports by regulators, it should be considered notable. When a recall hits this threshold, simply counting units is no longer going to cut it.
For these notable recalls, SASB expects a detailed narrative. You need to provide a clear description and the root cause of the issue. You have to state the total units recalled and the actual financial cost to remedy the problem. You need to declare if it was voluntary or involuntary, detail the specific corrective actions you took, and importantly, disclose any other significant outcomes, things like pending legal proceedings or tragic fatalities. This very specific checklist provides the critical context that investors absolutely need to assess the real magnitude of the risk.
Which brings us to section 4, metric 2, legal losses. Let's break down RTE 250A.2. Looking right at the SASB framework itself, specifically metric RTE 250A.2, it mandates quantitative reporting of the total amount of monetary losses as a result of legal proceedings associated with product safety. And note the unit of measure here. It must be reported in your presentation currency. This is exactly where the legal risk literally hits the income statement.
So, what exactly goes into this monetary loss figure? The standard is super specific about the adjudicative proceedings you've got to include. You have to aggregate all monetary liabilities owed to opposing parties. This means losses from civil actions, like court judgments or out-of-court settlements. It includes regulatory proceedings, like penalties or disgorgement brought by a government entity. And yes, it includes criminal actions too, encompassing criminal judgments, penalties, or restitution. Now, here's something absolutely crucial to remember. It's what we call the zero rule. When calculating your total monetary losses for this disclosure, you add absolutely $0 for your own legal defense fees. The standard strictly excludes legal and other expenses incurred by your company for its own defense. You are only reporting the monetary liabilities paid out to others as a direct result of the proceedings. But it's not just about the final dollar amount. Metric RTE 25A.2 also requires a brief narrative. You have to describe the nature and context of these monetary losses. Like, was this a judgment issued after a long trial? Was it a settlement? Maybe a guilty plea? And what was the context behind it? Did this stem from an inadequate product testing or maybe a failure in safety certification? Investors really need this context to understand if they're looking at a one-off error or a systemic failure in your product lifecycle.
And finally, Section 5, Documenting Corrective Actions. The path forward.
Once you incur these legal losses, SASB basically requires you to document your response as if you're drafting a binding legal resolution. You have to outline specific, proactive, corrective actions. Did you make structural changes in operations or management? Did you overhaul your manufacturing processes? Or maybe implement some new quality control technology? Highlighting these specific steps proves to your stakeholders that the root cause hasn't just been noted, but has been aggressively managed. Which brings us to one final, really provocative thought to leave you with. Are your product safety metrics just a compliance checklist to you? Or are they a true reflection of your operational resilience? Because reporting these metrics, tracking the recalls, identifying those notable incidents, and aggregating the legal losses, it shouldn't just be some year-end paperwork exercise. By building out this dashboard, you are empowering your entire organization to see the direct link between product safety and financial health. I challenge you to use this standard not just to report the numbers, but to actively build a genuinely safer, much more resilient business.